Hey everybody, this is 𝙂𝙊𝙇𝙑𝙀𝙍. I apologize for the technical difficulties. We were having problems getting the stream started. It seemed like the meeting that I had set up in Zoom was bugged, so we had to restart and do everything over. But I'm very pleased to be joined by a very special guest, Economic Ninja, here to discuss China, the debt contagion, and what's going to happen. Are we going to crash the world economy? Economic Ninja, how are you doing today?
Good. How are you doing? Sorry, I'm actually trying to get the tweet out right now. All these technical difficulties. Yeah, let's talk about China. What's going on? We not only have a shipping industry literally imploding right now, but now we have a possible hot war with Taiwan. I mean, what else could be?
Yeah, it's crazy. News came out today, or maybe it was last night, about Fantasia defaulting in China. So we had Evergrande, we've all been talking about for 2 weeks. Now it's Fantasia. Chinese were saying, oh, this is not a big issue. We're going to be able to stem this. We're going to print some money. We're not going to pay some overseas bondholders, all that kind of crap. And then Fantasia hits, and it's like full on debt collapse going on in China.
You're right. They said it's no big deal, and it is no big deal to the Chinese because they're actually defaulting on their dollar-denominated debt. So you're absolutely right. It's no big deal. My thesis is that China is essentially going to be going to. There's actually another company on top of Fantasia. Hold on, sorry.
That's right. I did the same thing. I had the stream going in another window. We'll get it figured out, folks. No worries. Yeah. We've only done this 1,000 times.
I swear, we are professionals.
We are.
There's actually, I believe now, 3 companies in China that are real estate developers that are going under. And but Fantasia, I believe, is the second that has an official dollar-denominated bond that they have ceased to be. They're not paying their interest payments on. I believe that China is going to be going to their all of these companies. I believe in the next couple of weeks there's going to be more, and they're going to say you are not going to liquidate your Chinese real estate holdings right now. We're going to look at selling your overseas holdings, and the reason why is because it's exactly what everyone's probably thinking. If all of a sudden some massive property developers, and I believe right now Evergrande holds 2% of all the real estate in the country, which is insane, starts to liquidate, then there's more sellers than buyers. And we all know what happens, just like in 2008, 2007. Right. But I believe that that's going to cause some very serious ripple effects in the next 6 to 8 months in different countries, including America.
Yeah, that's what I was going to ask you. And just to reset the topic for those who are joining late, because I know we have a lot of people entering the stream now as YouTube notifies people and we get our Twitters out. Super chats are open if you guys want to ask a question down below and get our attention. We're talking about Chinese contagion. We're talking about Evergrande, Fantasia. Apparently the Chinese politicians lying, of course, about how bad this is. My question is, and coming off of your last comment, is this just the tip of the iceberg, Ninja, or is there a whole shitstorm coming in the world debt markets?
It's absolutely the tip of the iceberg. And what's funny is I did a video about commercial mortgage-backed securities back in the beginning of August. I said that everyone on YouTube, you may not have heard it now, and I guarantee you most people haven't heard about these CMBS. I'm thinking hardware all of a sudden, but these, yeah, you know what I'm talking about. I'm totally blanking out right now because I'm watching all these comments go by. Yeah. Everyone's going to know what they are in January. Nobody knew about mortgage-backed securities back in 2006, but everybody became a professional in 2008. Unless if they were completely in the dark by the time they watched The Big Short, the movie, replaying everything, then everybody knew. Well, the facts are it is so big in China. That's one thing, tip of the iceberg. Here's the other problem. There's already a whistleblower case in America, and it's been about 1.5 years now trying to blow the whistle on how corrupt the CMBSs are in this country. So to answer your question, tip of the iceberg in China, but the ripple effects are about to, and I believe in 6 to 8 months, show everybody worldwide how bad this is.
So you talked about the recent video you had on your channel was the crash will make the rest look small. And I think talking also about student loan debt, mortgage debt, bond stocks, inflation. Talk about, give us your opinion on all of that stuff. How bad is that here in the United States?
Well, so it's real simple. I mean, we've never been at higher student loan debt. We've never been at higher auto loans. Quite frankly, it's insane to me that we're paying $80,000, $90,000 for a fully loaded diesel truck. But the only reason we're allowed to do that is because the loan terms, get stretched out, the interest rates drop, and all people think about is that monthly payment. We're also seeing mortgage debt at all-time highs. Everything is at an all-time high right now. And what's even worse now than in 2008 is that, well, it blows me away that people don't remember 2008. It's that cycle just completely, completing itself. I got to share this real quick story. There was a lady in DMV. I went to go get my DMV paid for. She knew that I was a real estate agent, just shared she just bought a house. And I went, wow, congratulations. Rough time to buy, but that's what I'm thinking. And she goes, man, I'm so excited. And I go, is this your first house? Because she's very excited. She goes, and then instant depression, just the eyes lay down, head tilts down. She goes, no, we sold our house. We lost our house in the Great Recession.
Oh,
and
no.
Said, yeah. And what's crazy, and I had to ask, right? I didn't. And I said, well, when did you buy that house? And she goes, we bought right at the top. And the thing is that people don't remember these things. They're motivated by fear of missing out rather than logic and going, maybe this is going to, turn, just like we talked about with lumber at the beginning of the year.
Yeah, it's, the real estate market's a big mess. I used to be a real estate investor for 19 years. We're in 2 real estate investment companies here in North Texas. Sold out in 2018 because I thought we're getting near a bubble. I mean, we were already in a bubble then. And in Texas, it's not as bad as other places, but it's still a bubble. Yeah. But I said, we're near a bubble. I'm getting out. I sold out in 2018. I'm glad I did because we're seeing signs of real estate stress. We've got, I think for the first time last month, inventory started to blow out and prices started to come down for the first time in a long time. Do you think real estate's about to blow up?
Yeah, let me speak to what you did in 2018, because a lot of people, I did the same thing. I sold my last piece of property in 2018 because I said the banking system is collapsing, and people laughed. Of course, they laughed in 2005 and 6. So I did the same thing, and it actually happened. You were 100% correct, Rob, because by 2019, September of 2019, the banks were so freaking out. They did not want to loan any money into the market, including they did not want to loan overnight to other banks, and the interbank lending rate literally spiked to 10.5%. And just for those of you that don't know what that is, it's the lending rate that banks set in the middle of the night for adjusting how much debt and how much equity they have, how much cash they have in reserves. And to give you an idea how bad 10.5% was, in 2001 during 9/11, it hit 6%. In September of 2008, when Lehman was collapsing, it hit 6.5%.
Right. So
to say 10.5% was big was an understatement. So yes, to answer your question, Rob, I do believe we're on the precipice. It blows me away that economists keep saying, "Oh, real estate's a great investment." Hey, we saw Jeff bring it up this last weekend. Real estate's going to keep going up, and I said, you're high.
Really? Yeah.
The only way real estate can keep going up is first, if institutions become the buyer of last resort. And people think they are, but we can get into that. It's actually BlackRock is not, buying up everything. And secondly, the only way that people can afford these payments is if their wages go up. In 1980, if anything, was an amazing lesson in the fact that the crisis, the inflation ramps up, gold and silver explode, and wages take some time. Wages didn't catch up to that inflation event until about 1983 to 1985.
Right. Yeah, it's, real estate's one of those things. People tell you, the teacher in traditional school, real estate is your main investment. And really, when you own a home, it's not. You really spend a lot of money for shelter service. So yes, you're investing in shelter service. You're investing in safety for your family. You're investing in a roof to put over your head. But unless you time the market just correct and you live in an area that tends to bubble up, you're not really going to make a big return on your money. It's not an investment. It's a cost. It's an expense. That's something Robert Kiyosaki teaches a lot of. One of my mentors when I was in real estate is, if you're going to do income producing real estate, don't consider your house as income producing. It's not. It's a cost. Go out and buy some income producing real estate. But I think also the timing is important. I wouldn't go out and purchase income producing real estate right now because I'm just afraid that I would get upside down in that.
Well, the government's already said you don't have to pay. Times are tough. So now, if that happened a year and a half ago, what do you think is going to happen when the stock market and the indices are all starting to collapse? Unemployment spikes because literally it spikes not because the government's forcing you to close down, but it's because companies aren't able to sell anything or do anything, and so they have to lay you off. Well, then this is going to be worse than what happened a couple of years ago now. And so, it's funny. Robert Kiyosaki does preach that, your home is not your biggest asset. But what's funny to me is a lot of people go, well, then I'll just go rent where I want to live. And I go, it's always a good idea if you're going to live somewhere for a long time and you can live below your means, right? And go buy an apartment, a condominium, a small house, and you're paying your payments less than rent. well, then it's a no-brainer, right? Because now you get the added write-off, the ability to possibly gain some equity. So I'm sort of against what he says right there. But I am really big on, yes, why your home is not your biggest asset. An asset is something that pays for itself. And with that thinking, since you got to live somewhere, technically, that works out.
So I want to get to Silver Symposium and what you talked about Silver Symposium here in just a moment. But we had a question from Conrad, who's one of our super fans. He says, sounds like China may need the nuclear reactors because of their energy crisis. Talk about the energy crisis going on in China and the one that's going on in Europe as well. We've got dual energy crisis here.
Yeah, okay, so I used to work in a nuclear power plant. And what's scary about nuclear, it is literally the cheapest and cleanest energy there is.
I didn't know that about you, first of all. That's awesome. What did you do there? Yeah,
so I actually would work the outages. Every 11 months, a reactor, we call it a can, would have to go offline to be cleaned and serviced. Any little part that needs to be changed. I would actually do everything. I mean, I've even been in the cooling rod pool and all, not swimming. Cool. Yeah, I've been literally like within 20 feet of glowing rods and all that stuff. So that's probably what, something's different. So, but it is the cheapest form of energy and the least wasteful when you look at how much energy those rods produce. Mm-hmm. With that being said, that also doesn't put a lot of money in bigwigs' pockets. And people need to realize that. If you look at how much, and we've all heard, it takes more fossil fuels to build a Tesla and build those batteries, and then, how long it's going to take for them to be recycled and all this stuff, than if you just had a gas guzzling car. But that's not what makes money. So when we talk about, and it sounds funny because I have we live nearby a reactor, 2 reactors that are going offline here in 4 or 5 years. And our governor, you've probably heard of Gavin Newsom. At a certain point, he went, I think we need to actually reclassify. There's some stories coming out. Nuclear is clean energy because we're pretty screwed right now. We don't know how we're going to replace that power. And so I think, yes, China is going to need nuclear. They're going to need to produce more and more electricity. And yeah, what's happening right now should be an amazing opportunity to learn everything you can about reality, because those power shutdowns are about to hit our country and the rest of the world, just slap us in the face with shortages.
So what do you think is causing the shortages? So we've got shortages across the supply chain, like freaking everywhere. I mean, I'm talking, I go to Buffalo Wild Wings Sunday night. I got back from New Mexico. My daughter had a premiere for Big Sky.
I saw that.
And I get back Sunday and I'm like, I'm exhausted from the flight. I just want to grab some wings, watch the game, have a beer. So I go out to Buffalo Wild Wings, they're out of wings. Yeah. And not a big deal because we've had wing shortages off and on for like 2 or 3 months. And not only in Texas, but I've been traveling back and forth a bunch of places. There's wing shortage everywhere. But what got me was they couldn't serve me a beer. They're like, we're out of CO2 cartridges. I said, okay, well, can I get like a Diet Coke? They're like, well, sir, those are also powered by CO2. And I'm like, what the hell is going on? Why are you out of CO2 cartridges? He said, our supplier can't get them. Yeah. And he said, it started with our few restaurants in Dallas-Fort Worth, but we think it's going to go national. They don't have enough CO2 cartridges. So even getting a beer and some wings, I can't do that anymore at Buffalo Wild Wings. Talk about shortages, man. There's shortages all over the place.
2 months ago, I covered a story that the CEO of Tyson Foods came out, and they're one of the largest wing producers in the country. And he came out and said, not only are you going to be dealing with longer shortages of the chicken wings, but we can't stop but raise the prices. And we're having a hard time raising them fast enough. Now, when I did that story a couple months ago, I was trying to explain that what he was referring to was he was raising the prices on the middlemen, the warehouses that are storing these chicken wings and selling them to Kroger and Albertsons and all those guys. It will eventually reach us. Well, now we're already starting to see it, but the sad thing is there's actually a hyperinflation coming in food because there are some people who want their wings. And I ain't gonna lie, I love chicken wings. There are people that are gonna pay a certain amount for it. It's so simple to look at the lumber story. And that was such a great learning lesson back in March when I was saying, don't worry, lumber's going to collapse by July. And I said it was because people care more about putting food on the table and the price of gasoline. Well, now that exact same thing happened. Lumber went, 400, 500%. Then it's now collapsed below where it started. So let's talk about food. There is a certain point where it is going to hit a point where people are going, I'm literally going to eat beans. And I know there's a lot of people that are listening to this going, there's no way it's going to get like this. I'm like, well, then you have normalcy bias because this is literally happening. These shortages, people are going to panic. They're going to hoard certain food. We saw it with toilet paper. I went to Costco today to buy some toilet paper, and the only thing left was the expensive brand. It was like $26 for a pack. And they said,
isn't that crazy?
Yeah. So I'm like, no more Mexican food for me.
You know, what Wall Street Silver talks about a lot is, good comment. Wall Street Silver talks about shrinkflation, right? And it's not just inflation of prices, it's the shrinking of the packages. And man, have I ever been noticing that. And the funny thing is, I'll walk into Walmart and all of a sudden their seasonal displays have exploded to about a third of the store. And I was talking to one of the guys that was stocking the shelves. I'm like, why do you have Christmas and Thanksgiving displays already in addition to Halloween? Because I had them all going.
Yeah.
And he's like, well, we don't really have enough product to stock the shelves, so we're just running out all our seasonal stuff. I mean, we were talking about Walmart, one of the largest distributors and grocers in the world, certainly in the United States, multi, $100 billion company, can't stock its shelves.
So that's a really, sorry, I didn't mean to interrupt. That's
go
a really good point you make. So I was blown away that they had the Christmas stuff, because I thought that they ordered a little bit later on in the year to get their Christmas stuff going. Right. But obviously I was wrong. Now, one thing I've noticed about the Christmas decorations, they're less. It's like this. It's not the high techy stuff, right? It's, to me, in my local stores, it's the low tech decorations, the cheap stuff.
Right.
It has blown out because what we're seeing in Walmarts and Targets is necessities are drying up. Because the people need necessities. And so that's why, my local Costco, they removed 30%, this was a year ago, of the steel shelving and blew out the center to make it look like they were still full. Right. And so that's what's blowing my mind. Now, we've got those shipping containers off the coast. Eventually, Port of Long Beach, I just did an interview with Sage News. They're about to go 22 hours a day, right? Savannah's 24. They're literally rerouting ships to Savannah so they could be offloaded, but we now have a traffic jam at the Panama Canal. But when all of these guys get unloaded, the consumer is about to be fed tons of items where literally this is going to be the issue. Walmart's not going to have enough room because they don't have a back room to put all the stuff, right? You're going to see sea trains out back storing stuff. And what's going to happen is the public's like, I'm paying way too much for my chicken wings. I don't need a PlayStation 26 right now.
Right.
So I think we're going to see an absolute deflationary collapse in non-essentials. Exactly.
So let's get to the Silver Symposium. You had this awesome talk where you got up on stage and you were talking about the history of what you invested in and what worked, what didn't work. And I wanted you to kind of talk about that talk a little bit, because we're talking about problems here. We're talking about global debt contagion, energy crisis in 2 different continents, shortages all over the place. Of course, inflation, is popping up. Company CEOs are saying our costs are rising faster than the CPI, which is an indication the CPI is not accurately tracking inflation, which we kind of know. I mean, we all suspect.
Yeah.
But talk about, some solutions here. What are the things that you get invested in, and how do what do you say to people to help them figure out, where to put their money?
Okay, so we're not talking about the Ferrari story. We're talking about my different cycles that I went through as an investor.
Yeah, and just talk to people about the cycles you said, and how to invest in things in different cycles, and when to know when the cycles are coming and going.
And that's something I'm about to say, something that half your crowd might not really like, but there's a reason for it. So okay. So I've been interested in cycles ever since I was younger, but I didn't realize it. When I started real estate investing in 2001, I'd already been investing in stocks. I was investing in stocks during the .com boom, and I had just started my career, and I had a small retirement 401k or whatever it was. And when I saw the top blowing off, we moved all of our retirement into bonds, and we were really fortunate. As the stock market collapsed, I then, by 2002, 2003, had put it into European equities, and it blew up for a few years. Well, when I started investing in real estate in 2001, we blew up. In 2004, I'm in front of Robert Kiyosaki. He's personally showing me how to become an accredited investor, get involved in oil. I was just so blessed with meeting all those guys, and I was, hard charging. But in 2005 is when I saw the real estate bubble forming, and it wasn't a rocket science. The Fed just announced, hey, we're going to do this thing. It's called a dot plot plan. We're going to raise rates. And I said, there's no way people are going to be able to afford mortgages at today's rates or today's home prices with tomorrow's rates. So we got out. Well, then I saw that, bubble collapse. And then I got into precious metals. And I started learning that there is never nothing is forever unless you talk about a long-term trend when a currency is being destroyed and inflation brings an asset class higher. Okay. It doesn't mean that you're rich tomorrow. It means your stuff's just worth more, but your dollars are worth less. So the one thing, the interesting thing about, gold and silver, we use the late 70s, early 80s as an example. When we watched gold peak, I don't know, it was $800 and silver peaked right underneath 50 or touched 50. And where did it go after that? It went down, right? Now, it was a multi-year, up and down trend, right? But the thing that interests me is I hear it all the time. I'm never letting go. I'm never selling. And I go, I don't think that's always the right way. I think watching channels like yourself, Rob, as this next explosion in the value of precious metals happens, and trust me, it's going to happen. It always rebalances, right? When we account for the money printing, but it is always last of the party. There will be a point where a new currency is put out, and it will not be the time to be holding on to those things. I mean, I wouldn't be surprised, and I'm glad I know that you invested in real estate, because I have a feeling Rob Keen someday is going to be talking about real estate and going, oh my gosh, look at these opportunities. And by that point, a lot of people are going, you're nuts. You're like, okay. And that's the whole point. You should never be in one asset class for your entire life. Because if you're,
I agree with that.
If you're nimble, you can make lots of money playing the cycles. Now, these are multi-year, possibly multi-decade cycles. But yeah, why wouldn't you? I mean, can you imagine if you had sold gold at the top at 800 and then played the market, because the stock market was decimated in 1980? Shoot, real estate interest rates were at 18%, which means it collapsed the price of real estate. Same thing happened in 1994 when they added multiple points on new construction loans. Don't even get me started. See, I'm going crazy. My point being is that you should never be in the same thing for a long period of time. You want to move in and out. You want to be diversified. But those pots of money move like this, and hopefully you're able to catch not the tops, not the bottoms, but somewhere near that top 2/3 to where you can move it into another asset class and really make a killing.
Yeah, I agree with you. I'm big on trends, and I teach cycles. And I think gold and silver is in its up, like the last part of its bull market started in 2000. So I think we got a lot of room to run there. But I agree with you. At some point, I'm going to come back to real estate because I had 18 years experience in it. I got out before the top to get into gold and silver, but that's the way I play markets. I play long-term. I move in and out of markets. I think you do the same thing. You've also talked about Bitcoin and some other investments, and it's good to have some investment diversity. So we've had Steve Mueller, super fan, on the channel talking about uranium. Uranium popped right after we did a 4-part series on that. So there are many, opportunities in the market. It doesn't just have to be gold and silver. And that's a really good point. If you're an investor, look for where the opportunities are. Don't, put all your eggs in one basket.
Actually, let me jump in on that.
Sure.
To say that we're at the last leg of this silver and it has a lot of room to run, silver especially over gold, is an understatement. What I love the underdogs when it comes to investing. I have 4 to 5 investments that I really love because I understand the fundamentals, and I can explain to someone else why it should go up in value based off of this, and this criteria, right? Sad thing is most people can't explain that, which means they're not investors, they're speculators. Now, these underdogs, like right now, precious metals is the underdog. I love to take some of my winners, my winning pots, and start pushing it off into the underdogs. When that one goes, and I give cryptocurrencies, anyone on the channel knows this, when Bitcoin moves up, after a little bit, the altcoins rush. And those altcoins slosh so much higher on a percentage basis than Bitcoin, right? The ones that I own are the ones that are always last to the party. And it's funny because everyone's, making their money over here. It could not even be crypto. It could be real estate over here or oils and equities over here. And you just sit back and like, it's okay, don't worry. And then when that slosh effect comes in and all the people that are FOMOing into an investment, that's when it gets scary because like, oh man, when do I sell? And I'm telling you, the day that metals do it, I can't tell you when, it's going to get nutty.
And you talked at the conference about being stressed about, do I sell or do I make another 100 grand on my position? Or it becomes stressful because you're managing that risk of when you get near the top, every additional day, every additional minute, there's risk that it's going to, start its downturn. Yeah,
I actually gave an example of being in the crypto market in 2017, and that was exactly it. I mean, when you see make your annual salary in one day, and the top, if you look at a chart of 2017, it was about an 8-week period when it went just parabolic and then started to collapse. And that catching a falling knife is no fun because every day as something's going down, your investments are going down, and you're about to see this in real estate. Oh my gosh, maybe it'll come up tomorrow and I could just get a little bit more. And that psychological game will just destroy you on the way down.
Good problem to have, though. Better problem to have than being the other way around and figuring out how you're going to pay the mortgage and buy groceries and stuff.
That's true. That is true.
Wanted to welcome to the program Steve Penny, who is a Silver Chartist. Thank you for joining us. We appreciate you hopping on with us.
You bet, guys. I got to say, I am so embarrassed. I've literally never done this before, but I got my time zones mixed up. But I'm happy to be able to join with you. Thank you so much for inviting me.
Not a problem at all. You're forgiven. We had technical problems getting the stream up and running. Zoom didn't want to let me live stream, but we got it all figured out. And we're here, which is what matters. And thank you for joining.
You bet.
Steve, I want to jump right into, we're talking solutions now. We were started the video talking about debt contagion. Now we have Fantasia in China. We have Evergrande. It looks like China's kind of blown up. At the same time, China's going through an energy crisis. Europe's going through an energy crisis. At the same time, we're looking at potential debt crisis here in the US, then supply chain. I mean, we went through all of the problems, right? But I like to talk solutions too. I don't want to just throw problems at people. One of the solutions is going to be precious metals. So here's a question from one of our Patreon supporters, �12. He wants to know, and I want to get your opinion, Steve, on this. What's the impact on PM prices for these factors? Rising US debt, crypto, use of cryptos as a potential alternative or another investment, strong US dollar, rising inflation, political unrest, increase in Fed balance sheet. So I just threw a bunch of factors at you. What is the net impact of those types of things on gold and silver prices going forward, say for the rest of 2021?
Okay, yeah. So number one, national debt. I mean, obviously that's a tailwind for the metals because there's no solution. They can't raise interest rates and normalize policy because it would bankrupt the government quicker. And, we know they're going to do financial repression. They're going to try and inflate this debt away. That's always what they do going back millennia. So that's obviously a bullish headwind or tailwind for the metals. Now, as far as crypto, I bet Travis can speak much more eloquently than I can about this. But from my understanding, it's about a $10 trillion market, or excuse me, gold is about a $10 trillion market and crypto is about $1 trillion. So yeah, it can potentially take a little bit of, capital away from the precious metals, but is it going to replace the metals? I don't see that happening at all. And then the other things you mentioned, I think are also, just bullish catalysts. There's a lot of tailwinds, which flies in the face of the price action. That's why it's so frustrating. I mean, silver's like the only thing that's down over the last year, yet it's got all of these crazy bullish fundamentals behind it, which is opportunity for, I think, contrarian investors, but it's frustrating for those who have been at this for a while.
So Steve, I saw you on 𝙃𝙀𝙍 recently talking to David about the silver market, and there's some interesting dynamics going on in the silver market. Maybe you can talk about what's going on with silver. What's the reason why the price isn't rising? I think you had a very interesting conversation with him on that.
Thanks. Yeah. So I think your listeners probably know this, but the price we look at when you go Google the price of silver, what you're looking at is a price based on the supply of demand of paper contracts that are set on the COMEX. And those paper contracts can be issued at will by large banking institutions. That's pretty well documented. Sometimes it reflects the actual physical price, sometimes it doesn't. So yeah, we got to talking a little bit about manipulation, and that's not my area of expertise, but I think it's the evidence is overwhelming at this point that the metals are manipulated.
Yeah. Ninja, do you think that eventually breaks? I think we all kind of think that it's manipulated. Look at the derivatives market. What breaks that control and causes everybody to flock to the precious metal, then prices finally to rise where we think it's fair?
Great question. So the other day I did a video on Michael Burry and how he's been warning of an upcoming hyperinflation and very soon. And somebody emailed me the other day and said, "Hey, Ninja, Michael Burry is also saying that silver and gold is going to go down. He says everything's going to go down." I said, he's absolutely right. And I know they were shocked when they read that. And I said, look, in 2008, stocks didn't start going down when Lehman crashed. They started actually trending down in late 2007. We'd already all been handed stimulus checks by spring of 2007, mind you. Things were looking bad. Stocks started trending down. The paper price of gold and silver started trending down. Now, when gold and silver paper contracts trend down slowly, the VIG usually, the price above spot, usually tends to follow, as long as there's not a big rush to the physical metal disturbing that market, right? But in July of 2008, gold and silver collapsed in price. And when I say collapsed, we had a spot price on silver approximately $19. It bottomed in November of 2008, approximately 45 days after Lehman Brothers collapsed, at $9, if my memory serves me right. From there, it went on a multi-year bull run. Now, when that collapse happened in the paper price, you could not go down to a store and buy a Silver Eagle for less than $20. That's it. Now, we just witnessed something like that on February 1st with Wall Street Silver and the whole Wall Street Bets thing, which that's a whole nother video, what's going on behind the scenes with CNBC. But when that happened, it retained its value. And I believe the same thing's going to happen. I explained Michael Burry does not know much about the physical market at all. He's referring to a paper market.
Right.
So with that being said, this is the first time in history I get to talk to, I mean, you too, you get to talk to all the owners of these bullion companies. Well, one was stressed out and I said, whoa, wait a minute. When was the last time or ever you've taken 1,000-ounce bar off the COMEX and sold it on your website? And he says, never. And I said, well, isn't that weird? And he goes, well, yeah, it's definitely new. And I said, no. You're about to experience, if all of these, you know, a tinfoil hat conspiracy theorists about manipulation are correct, because we are literally taking the bars. Shoot, even some companies, what Bison Bullion, are cutting those bars like a loaf of bread and saying, here you go. And I call it the economic Berlin Wall right now.
Mm-hmm.
So pretty soon we're about to see this. And even great people like Rick Rule say, I used to think this whole thing was a joke, and these kids on, he calls them kids, calls me a kid too.
Well, he's earned that right, probably.
There you go. Yeah. On Wall Street Silver are going to get wrecked. And he goes, but I was wrong. The Hunt brothers were 3 guys with leverage. Wall Street Silver is 1 million people with cash. And he goes, I'm physically watching the amount of metal transfer in just the Sprott fund alone. This is going to be awesome.
Yeah, I do think it's going to be awesome. Steve, what do you think is the catalyst? What is your outlook on silver? What's going to cause it to finally hit that bull market and just run? Everybody's been asking me this for about 1.5 years, 2 years. So I know we have a lot of people following it. They're just waiting for silver to pop.
Yeah, I'll give the caveat that there's a million potential catalysts out there, and trying to predict it is tough. But from where I sit right now, I think a very likely outcome is, look, the Fed right now is talking about taper. They're talking about normalizing monetary policy and interest rates in 2022. And for the most part, your generalist investors, the people outside of our sphere, are kind of buying that hook, line, and sinker. Well, if we see, like I say, a 20% pullback in stocks, a lot of people would call that a crash. I think a 20% pullback in the general equities would cause the Fed to reverse course ASAP. I mean, immediately. And that would probably coincide with almost a V reversal in the metals. So that's one potential catalyst I'm looking at.
You guys know that exact event happened in 2018. The Fed started raising rates in 2015. And by October of 2018, things were going bad. And was it Christmas Eve? They went from a raising to a lowering position in rates. That was a great example of that.
Yeah, I think it shows that at the end of this fiat debt system, this Keynesian experiment, that they're not going to be able to severely tighten. All this jawboning the Fed is doing about tightening, pulling forward interest rate raises to 2022, to me, I think they're trying to prepare the market for it. But I think if they do it, they're going to hit what happened in 2018. Now, it may take a while to get there, but I think if they really try to tighten and raise interest rates, this machine really slows down. And in light of all the energy and supply chain shortages, energy crisis, what does that do to the world economy? If the Fed goes on a tightening spree, does that affect not only the United States, or does that affect our trading partners as well?
Who do you want? Steve, do you want to take that?
Either one of you guys.
Sure. Well, as you're saying that, this may not be a direct answer to your question, but you're saying that they can't raise rates. Let's say a normal interest rate would be 5% in average over the last several decades. Well, let's apply a 5% interest rate to a $30 trillion national debt. That would be $1.5 trillion of interest payments annually. And what does the federal government collect in tax receipts? Somewhere around $4 trillion. So can we afford to take a third of our tax receipts and direct that towards paying or interest on the debt? It's a math problem that cannot be solved. There's no solution. And Chris Martenson says problems have solutions, predicaments have managed outcomes. So there's no solution here. There's some managed outcomes, and unfortunately none of them are very good for the general population.
Steve, that is some fast math. Look, check this out. So we saw this, when we were talking about 2015 to 2018, the Fed went from approximately, I think it was 0.5% Fed fund rate to where they just barely touched 2.25%, 2.5% by 2018. And the system couldn't even handle it. So we know they could never get anywhere near that because there's been so much more money printed, right? Now, interestingly enough, from October of 2018, and I'm paraphrasing or going off of memory, till about Christmas Eve, the Dow fell about 19%, which is 2% greater than the first leg down of the Great Depression.
Yeah.
Now, if we go back to 2013, 2014, the Fed was it's not jawboning, it's bluffing. They're saying, hey, we feel things are good, so we're looking to tighten things up. We're going to pull back on quantitative easing and possibly raise rates. What that does is that gives the market, and they don't do it until the market starts to slip and sentiment is dragging down. It gives them a euphoria. They go, don't worry, your currency is strong. The economy is stronger than you think. Trust me, we know. And then what happens is the euphoria lasts for about 6 months. The markets start moving up. And then all of a sudden it starts to slip like, whoa, wait a minute. We can't pay that debt. Just like Steve was saying, right? With that super fast math. And I'm still impressed. But my point being is they go, you know what? You're right. Let's not raise rates and let's not pull back our tapering, or our quantitative easing. And then again, euphoria. And I have seen this over and over for the past 21 years. And it blows me away that this is, it's like almost like you had a magic wand and you're just sort of playing off of people's emotions. And that's really what those algorithms, those, high frequency bots love to hear.
The question to you, Economic Ninja, from the chat, Duder Scooter says, do you think the Treasury is going to run out of money October 18th?
No. So this is, again, something that is played over and over. It's kabuki theater. This is used to be able to push very scary and dangerous things through legislation. All right. Mm-hmm. This is a way of threatening the people, getting them worried, and getting a lot of people that do not understand economics behind them. The facts are, the reason why the debt can keep going up is because the Fed still has that magic spell over the world that everything's fine. They're still the person behind the green, curtain at the Wizard of Oz, essentially, and they have the confidence. Now, the fact is the Fed is playing a very interesting game of cat and mouse with all the other currencies. I call it the best smelling turd in the punch bowl. Sorry. But, they need to stay, they don't want to fall faster in any of the other world's currencies. So as everybody is printing more money and the value of those currencies are going down, as long as the Fed can stay on top and all the other countries say, hey, we still want to buy their debt because they're the strongest, they're stronger than us, they're winning.
Last question for you, Steve. A question from Dumb Money Media, and I'll direct it to you and just do your best to answer. Sure. He asked, when we have the crash, is there going to be a safe brokerage company? He's using Fidelity. How do you tell, is there a way to tell what's a safe way to hold your stocks if you're into the mining stocks?
And I would say the safest answer is to have physical metal stored outside of the banking system. And, I consider any mining stocks to be at risk of, if there's absolute contagion in the financial markets. I don't know that one is better than the other. Jim Sinclair, I've been following him for a while. He's a big advocate for taking owner of your stock certificates and putting it in a safe. That way, if
right,
I don't personally do that, but that's something to consider. It's less liquid. It's harder to sell your stocks when the time comes. But
a lot of people don't know that. But when you get into and we won't have time to fully flesh this out, but I've done research that when you get into the brokerages, you go into like a fractional stock system where they issue shares of stock in like 1,000 stock increments. And if you own less than that, you're a claim holder on a piece of paper that a lot of other people are a claim holder on. So and this is all set up through Seed & Co. and the whole system. So that's if you have an online brokerage. So if you do take your physical stock certificates, you have to secure them from fire and theft, but they're yours. And you could show up later, validated stock certificates, and say, okay, here's my stock. So that is a way to kind of hold it outside the brokerage. But like you said, it's less liquid, harder to get rid of. You could come back into the brokerage system and exchange them for shares, but it's a lot of work. So there is a way to kind of avoid some of that risk, but it does take some work.
And it's called street name recognition. That's how TD Ameritrade and all these other brokerages, they essentially become the placeholder for you for the little bit of time that you hold it.
Exactly. So you're in a trust relationship with your broker. You don't hold it, they hold it for you. And they have that fiduciary responsibility towards you as you're the beneficial interest. Kind of like when you hold a bank account, you don't actually own the money in the bank account, the bank does. You're the beneficial owner of that bank account. A lot of people don't know that either, but that's the way all these legal things are set up. So another reason to hold gold and silver, because you don't have to mess with all that.
Exactly. Yep.
in times of crisis. All right, wrap up. Go ahead and wrap this up, guys. What's the last thing that you want to leave the viewers with, Economic Ninja?
I want people to start realizing or learning about bank bail-ins. We knew all about bank bailouts in 2009, something called a bank bail-in. You actually don't own the money that's in your account. You're an unsecured creditor of the bank. Start learning about it and then figure something out.
Okay. Steve, any last thoughts for the viewers?
Well, Travis literally said one of the things I was going to say, you're an unsecured creditor in the age of bail-ins. But just a couple of comments. I hopped in and you guys, I could tell we're having an awesome conversation, but I think it's very, I feel like it should be talked about more, that these investments are very cyclical. And yeah, I want to own some physical metal as an insurance policy for forever, but that doesn't mean I want to hold my mining stocks and even all of my physical. I mean, it depends how much you have, but having an exit strategy is so important. Back in the 1970s bull market, it's well documented. A lot of these people who are they were all over it for 10 years and they watched silver go up to 50 and then they watched it come right back down.
Right.
So having an exit strategy, rotating from overvalued assets to undervalued assets is so important. And then one final thought, we were talking about leading up to 2008 and the metals getting hit in a stock market decline. I think that's very likely to happen again. However, a difference is that leading into 2008, the metals and the stock market was rising in unison. Right now, it's kind of opposite. The metals have been going down for a year while the stock market's blown off. So if we do see that sharp pullback in the general equities, I'm not sure it's going to hit the metals as hard as some people may think.
Yeah, that's a good point. The equities have not traded back up to where gold and silver are. They're lagging. So they've already had, they already have, I think, a lot of room to run. I agree with you. I don't think they would pull back as much in a general stock market correction. They may pull down a little bit, but they're already running behind. They're one of the most neglected sectors in the market. Yeah. And when you're that neglected, I happen to think that people will flood into them when other stuff, when people are dumping other stuff, they're going to look for value. They're going to look for metals. They're going to look for metals mining stocks and some other things as well. They may go into cash, depending on, how the dollar is. But I agree with you. I don't think they can go a whole lot lower because they've been, since 2011, the investment's just not been there.
Yeah, for sure.
All right. So how can people contact you, Steve, if they're interested in the Silver Chartist service? By the way, after I met Steve at Silver Symposium, he signed me up free for his premium service. I got to say, it's awesome. I got the first edition of it this Sunday, full of great information, wonderful charts. You've got a video out I haven't watched yet, but I'm going to watch that next. Tell people how they can contact you if they're interested in your service.
Sure. It's real simple. Just go to silverchartist.com and that's an opt-in to get our free weekly letter. There is the option to upgrade to a low ticket premium version, but there's no spam, no pressure. And we try and provide a lot of value just in that free letter. So silverchartist.com. Appreciate you.
Awesome.
The kind words.
Economic Ninja, how can they reach you?
Yeah, we just started a new website, 𝙂𝙊𝙇𝙬𝙊𝙎, trying to get as much information out as possible. There's a subscribe function there just in case all of a sudden you don't see us on this channel anymore. But yeah, and then The Economic Ninja on YouTube.
Awesome. Thank you guys so much for joining. This has been the live roundtable talking about China, the debt contagion, and how to deal with that in your investment portfolios, how to play that on Gold Silver Pros. Please share, like, and subscribe to help us grow the channel so more people find a way to the truth of the markets. If you love what we do, we have a Patreon membership that you can consider supporting. It would help us greatly and able to attend conferences like New Orleans conference, which will be in here October 19th, and to do other special things like mine tours for you guys. Thanks everybody for joining. Thank you so much, Economic Ninja and Steve, the Silver Chartist, for joining us today.
You're welcome. Thanks for having me.
You bet. Thanks so much, guys. Appreciate it.